Renowned for its harsh winters, the stunning moraine lake, and its iconic maple syrup, Canada is celebrated for its courteous citizens and its fierce hockey players. As a G7 member, Canada boasts the ninth largest economy globally by GDP. Canadians watching this video, remember to leave a friendly comment. Canada, a Commonwealth nation, operates on principles of peace, order, and good governance. While it values the common good and embraces some limits on individual freedoms, it is not a socialist country. The Canadian economy thrives on capitalism, characterized by capital accumulation, wealth generation through wage labor, and production by mostly privately owned companies that profit their owners. Although Canada has a robust social safety net, this does not equate to socialism. Instead, it represents a mixed market economy where capitalism prevails with minimal state regulation rather than a blend of capitalism and socialism. Much like other advanced economies, Canada evolved from relying on raw materials to developing a manufacturing base and eventually shifting to a service-oriented economy. In a previous discussion, we highlighted that service-based economies often see their service sectors comprising around 70% of their GDP. This trend is evident in Canada as well. Positioned among the top 10 on the Economic Freedom Index, Canada shares several economic characteristics with Australia. While Australia is known for magpie attacks and Canada for its geese, their economic landscapes bear similarities. Both countries are affluent and industrialized, with significant housing market challenges. They are also heavily dependent on international trade and commodity prices. Each country relies heavily on a single trading partner, China for Australia and the United States for Canada. Both are striving to diversify their economies and are actively seeking more immigrants to bolster economic growth. Canada's fertility rate is among the lowest, falling below replacement levels, and it has a rising aging population. Although not yet comparable to Japan, Germany, or Italy, with 17% of its population over 65, Canada is not far behind in facing demographic challenges. Adding to the complexity is Canada's median age, which is nearly 42 years. This demographic shift means more older adults are using social and other services without contributing economically. Meanwhile, a relatively small working-age population is bearing the financial burden. With a low birth rate, fewer children are growing up to enter the workforce. Consequently, Canada is leaning towards more open immigration policies to increase the working-age population. Taxing the wealthy has its limits, and cutting social services is not feasible as citizens depend on them. The population issue is at the heart of the matter. Encouraging immigration is primarily an economic strategy rather than a moral one, and is not primarily driven by ideals such as diversity, inclusivity, or multiculturalism. Canada manages its immigration system primarily to benefit its own economy rather than the immigrants themselves. The goal is to boost the economy and address demographic challenges, such as the need for a higher birth rate. With a foreign-born population of nearly 8 million, making up over 21% of the total population, immigrants play a crucial role. Immigrants often arrive during their prime working years, join the tax-paying workforce, and typically use fewer social services. They are willing to take jobs that locals might avoid and generally appreciate the opportunities Canada offers, especially compared to their home countries. Moreover, immigrants tend to have higher fertility rates, contributing to population growth, and they bring in foreign capital, enhancing cash flow. Wealthy immigrants can drive property prices up, but they also inject significant funds into the economy. Skilled workers bring essential expertise, though there is no guarantee of employment, as the government does not collaborate directly with private companies for job placements. Temporary foreign workers fill positions that Canadians are less inclined to take. Lastly, international students contribute significantly by attending Canada's prestigious universities, generating billions in revenue for the education sector. For Canadian universities, these students are a critical financial resource. Foreign students in Canada face much higher tuition fees than local students, making it economically advantageous for the country to welcome this influx of money. Education is indeed a profitable industry for Canada. Beyond education, Canada stands as an energy superpower, boasting the third highest natural resource valuation at 33 trillion USD. With the third largest proven petroleum reserves, Canada is the fourth largest oil exporter globally, with Alberta and Saskatchewan leading production. However, despite these vast reserves, Canada imports oil for domestic use for several reasons. Canadian oil is particularly heavy, making extraction, refining, and transportation more costly. The profitability of the oil sector fluctuates with global market prices. High prices yield profits, while low prices render it unprofitable, similar to any other business where a competitor's lower-priced, comparable product can drive you out of the market. Consequently, Canada often imports oil from the US and Saudi Arabia, favoring cost efficiency. One controversial reason for Canada's oil imports is the insufficient pipeline infrastructure within the country, which limits the distribution of domestically produced oil. This situation is prompting Canada to explore alternative energy sources to meet future demands, driven more by economic factors than environmental concerns. Canada consists of diverse regional economies with varying perspectives on energy dependence. Some regions advocate for continued reliance on oil, while others push for a transition to green energy. Opinions vary on whether a gradual, well-planned shift to cost-effective and reliable alternative energy sources is feasible, and there is no consensus. Another motivation for reducing oil dependence is the need for economic diversification. Almost all Canadian oil exports are directed to the U.S. According to the staple thesis, the export of natural resources from Canada to advanced economies significantly affects its economic, social, and political landscape. Different staples, such as oil, minerals, forestry, and fishing, influence settlement patterns and federal-provincial relations. Some believe that Canada's economy can still diversify and evolve, while others fear it may remain perpetually dependent on natural resources, functioning as a resource hinterland. In simpler terms, Canada often supplies staple resources to larger countries and is closely linked to these major markets, limiting its ability to chart its own economic path. Ranking 36 on the Economic Complexity Index, Canada's economy is less diversified compared to those at the top of the list. Nevertheless, Canada's economy is quite varied, certainly more so than Australia's. It would be inaccurate to label Canada solely as an oil country, as it also has significant sectors in real estate, construction, finance and insurance, logging, and the automobile industry. Canada is the leading exporter of maple syrup, producing over 75% of the world's supply. Despite this, maple syrup has a minimal impact on the national economy, contributing only about 0.02 to 0.03% to the total GDP. However, it is crucial to specific regions like Quebec, where it supports thousands of jobs and relies on seasonal workers from abroad. For a fun fact, Canadians might verify in the comments whether the 100 Canadian dollar bill truly smells like maple syrup. Additionally, with the longest coastline in the world, Canada is a major exporter of fish and seafood products. Lobsters are Canada's top seafood export. Despite frequent claims during U.S. elections that some Americans would move to Canada if certain candidates win, Canada's trade and economic well-being are heavily dependent on its southern neighbor. Canada benefits significantly from having the largest consumer market next door, with over 75% of its exports going to the United States. The saying, "When the U.S. economy catches a cold, the Canadian economy sneezes," often holds true, except in the financial sector. Additionally, Canada's proximity to the U.S., which has the highest military expenditure in the world, provides security advantages. Most Canadians live near the U.S. border, reflecting this close relationship. Regarding labor policies, Canada adopts a pragmatic approach to minimum wage, allowing provinces and territories to set their own rates rather than having a uniform national rate. Canada boasts one of the highest levels of household disposable income, which is the money left after income taxes are deducted. However, this figure can be misleading as it doesn't account for the cost of living or average expenditures, which are critical for understanding discretionary income, the amount left after all necessities are paid for. This discrepancy contributes to the phenomenon of the working poor in many advanced economies, where apparent wealth does not reflect financial reality. Discretionary income data is often underreported, and while Canada is not as expensive as Switzerland or Norway, it still ranks in the top 25 for cost of living. Consumer goods prices vary significantly depending on the region. Furthermore, Canada is known for having high childcare costs as a percentage of a couple's average earnings and one of the highest household debt levels relative to income. Primarily driven by mortgages, Canadian household debt has surged, surpassing 170% of disposable income, fueling a housing market that exhibits bubble-like conditions, notably in cities like Vancouver and Toronto. Expanding Canada's manufacturing sector faces practical challenges due to high wages, rendering it uncompetitive against countries with lower labor costs. Consequently, cheap imports overshadow aspirations for significant manufacturing growth, leading to the gradual decline of existing industries or their reliance on government subsidies. Canada boasts a commendable single-payer healthcare system, often misconstrued as entirely free when it is publicly funded. Healthcare expenditure amounts to nearly 12% of the GDP, with some Americans highlighting perceived shortcomings compared to their own system, prompting discussions in the comments section. While agriculture is not a major strength for Canada, comprising only 1.6% of the total economy, harsh climatic conditions partly account for this. The availability of imported food at lower prices compared to domestic products further challenges the agricultural sector. To protect certain segments like dairy and poultry, the government implements measures against competition from low-priced imports, albeit at the expense of higher consumer costs for these products. Canada's culinary scene may not be globally renowned, except for exceptions like poutine and craft dinner. However, it leads the world in per capita donut consumption and boasts the highest number of donut shops per person, with Tim Hortons playing a significant role in this trend. As the second largest country globally, Canada's diverse landscapes, from Niagara Falls to the Canadian Rockies and abundant lakes, contribute to its tourism sector, accounting for 1% of the economy, with potential for further growth. With a colonial history influencing its official languages, French and English, Canada incurs costs related to bilingualism, including signage and services, estimated at $2.4 billion as of 2012. Unlike in the U.S., higher education in Canada doesn't burden students with lifelong debt. Canada ranks high in tertiary education attainment but faces a shortage of white-collar jobs. Talent drain remains a concern, with many graduates seeking opportunities abroad for better prospects. Acknowledging that its people are its greatest asset, Canada must invest in fostering entrepreneurial and innovative mindsets, shifting away from risk aversion towards proactive engagement. Despite these challenges, life in Canada is generally favorable, as exemplified by a visit to Tim Hortons for Timbits and a double-double coffee, a quintessential Canadian experience. If you love this video, do take out a minute to like and subscribe, and don't forget to let us know what you think in the comment section.